What if Jamaicans were the ones who funded Jamaica's future? What if it was us, not China, who built the highways, bridges, ports, and resorts? What if the same people sending remittances every month were also the ones funding the biggest projects on the island? Let's look at what actually happened and imagine what could have been. The deals Jamaica made and what we lost. Let's walk through 3 major infrastructure projects Jamaica handed over to China and what each deal really cost us in the long run. Number 1. The North-South Highway. In 2012, Jamaica signed a deal with China Harbour Engineering Company, CHEC, to build the North-South Highway, part of the larger Highway 2000 development. Construction began in 2013 and the highway officially opened in 2016. The goal, to cut travel time from Kingston to Ocho Rios in half. And it worked. What once took over 2 hours could now take less than 1. It was promoted as a breakthrough for tourism, trucking, and regional development. But the fine print told a different story. To pay for this project, which cost $720 million USD, Jamaica handed over full control of the toll revenue to Czech for 50 years, until the year 2063. Right now, toll collections are estimated to bring in 13 to 20 million USD per year. Over the life of the contract, that's potentially 1 billion USD in toll profits, all going to China, not Jamaica. As part of the deal, China was also given 200 acres of beachfront land in Mami Bay. That land today is worth roughly 250 to 300 million USD, with even more long-term tourism potential lost. So what did Jamaica give up? Ownership of a national highway, revenue from tolls, and a massive slice of coastal land that could have funded Jamaican businesses, housing, or locally owned resorts. Number 2, the Southern Coastal Highway Improvement Project. The second deal came in 2016 when Jamaica signed another agreement with China. This time, it was to finance and build the Southern Coastal Highway, running from Harbour View to Port Antonio and from Morant Bay to Cedar Valley. Construction began in 2019, and as of today, the project is still ongoing, expected to be completed in 2025. The total loan was valued at 384 million USD, financed by the China Exim Bank. The project was promoted as a long overdue investment in eastern Jamaica, an area that's been historically underserved. But again, the fine print reveals what we lost in return. What we lost? The contract allowed Czech to import materials duty-free, meaning Jamaica collected no taxes on millions of dollars worth of construction equipment, steel, and machinery. That's an estimated 40 to 60 million USD in lost government revenue. In addition, much of the labor was brought in from China, not sourced locally. This meant thousands of Jamaican workers were excluded from the project, losing out on as much as 200 to 300 million USD in potential wages and skills development. So Jamaica gave up tax income from imported materials, local job opportunities for engineers, construction workers and tradesmen, and the chance to build a skilled labor force for future infrastructure work. Number 3. Kingston Freeport Terminal Expansion. The third major deal happened in 2015 when Jamaica signed a long-term lease agreement for its main shipping terminal, the Kingston Container Terminal. This deal handed control of operations to a subsidiary of the China-owned CMA CGM Group under a public-private partnership. Operations officially began in July 2016 with heavy investments made to modernize and expand the port. Supporters say it improved Jamaica's ability to handle larger cargo ships and compete globally. But again, what did we give up? Jamaica handed over operational control of one of its most strategic national assets for 30 years, with the possibility of extending that control even longer. While the investment was welcome, the long-term trade-offs are clear. Foreign control of our busiest port, profits from port operations leaving the country, and reduced national leverage over our most important gateway to trade. The actual financial loss here is harder to calculate, but when a foreign company manages our port, they control the flow, pricing, and reinvestment of port income. Let's recap what we really lost. Alright, let's just call it what it is. The North-South Highway. We gave China control of our tolls for 50 years. Every time you pay to drive that road, that money, it's leaving Jamaica. That alone could add up to almost $1 billion US. And on top of that, we handed over 1,200 acres of beachfront land in Miami Bay. Land that's now worth hundreds of millions. We'll never get that back. The Southern Coastal Highway. This one was a loan. $384 million US from China. Sounds helpful. Until you realize we didn't charge $1 in taxes on all the equipment and materials they brought in. That's 40 to 60 million USD gone. And the jobs, most of them went to workers flown in from China. That's $200 to $300 million in lost income Jamaicans could have earned. That money could have changed entire communities. The port deal. We handed control of the Kingston Freeport Terminal to a foreign company for at least 30 years. That's our main shipping port. That's leverage. Now we don't control the profits or the policies. So what's the bottom line? Add it all up, and Jamaica gave away between 1.14 and 1.66 billion US. And you know what's wild? We didn't have to. If Jamaicans, here and abroad, had the tools, the structure, and the support to invest, we could have built it ourselves. Instead, we're watching others profit while we pay. What if Jamaicans had funded it? Imagine if Jamaicans, both local and abroad, had pooled resources to fund these projects. Instead of profits going to China, tolls could have supported local job creation, maintenance and upgrades, healthcare and education, dividends for investors in the diaspora. We already send home 2.5 billion USD every year in remittances. That's more than tourism earns in many years. The money is already moving. We just haven't redirected it into long-term national investment. Why the government keeps choosing China offers a complete package. Financing, materials, contractors, and workers. It's fast and convenient, but it comes at a cost in ownership, in sovereignty, and in future economic freedom. Jamaicans already know how to build. We've always built for ourselves. Partner systems, funeral plans, round robins, room by room home building. The structure is there. The money is there. What's missing is a scalable, trustworthy national investment platform. Imagine a different future. A diaspora-backed Jamaican infrastructure fund. Projects owned and operated by Jamaicans. Resorts developed by local companies. Toll revenues kept in the country. Returns going back to the people who funded it. It's not a fantasy. It's a choice. The real switch. This isn't just about money. It's about power. China isn't doing anything wrong. They saw a gap and filled it. But we have a choice. Keep giving away the future or start building it ourselves. If we want to own the future, we have to fund it. What if the next bridge was Jamaican built? What if the next resort was funded by Jamaicans at home and abroad? What if the next toll road paid for Jamaican schools instead of repaying foreign debt? If we don't invest in Jamaica, someone else will. And when they do, they won't just build it. They'll own it. Let's flip the switch before it's too late. This is the economic switch.